Good evening, ladies and gentlemen. Today is the 7th of September, and due to the lack of global cues from the American markets, we went off the Asian markets this morning, where we opened more or less flat, but had a very steady sell off from there, and most of it coming from Bank Nifty. I had a position that I had to manage. I managed it to some extent, and then I had to exit it beyond a point because holding that trade could end up leading to quite a slide on a market basis. And at that point, my trade was almost like being long futures, some of it. So it becomes very difficult to handle. It's no longer balanced, and I have to make a lot more adjustments, which in case I want to keep it alive, and in case there's a big reversal, then it could once again hurt me. And more or less what I decided at that point of time is to stop being long IV and go short IV instead. So I squared off on my long IV trades. Nifty was in a good profit. Bank Nifty booked almost at cost, and decided to take a short strangle. And because into a down move, I wasn't expecting much of a put side IV rise. Once that down move held, and once we started making an upper move, I was very, very certain that all the shorts that have been created by shorting the calls, they will have to get covered, and they would have to have a panic exit. So I managed to exit before the entire dip got bought back in a big rush, and that would have been quite painful to sit through if you got burnt on the downside and then you got burnt on the upside. Regardless, all said and done, from yesterday's market had to give up about 60,000, and today I managed to close positions worth about 3.5 lakhs of profit. And the only trade I'm carrying right now is the Reliance trade, which is over a period of a month, so it's quite comfortable where it is at this point. So in today's intro, I want to actually talk about something that I've addressed a lot on Twitter. I made quite a lot of noise about it, but it's this whole freak trade situation. So if you see, I've been people say I haven't spoken about it. I've spoken about it in between videos. I think one thing is not everyone watches the entire video because my videos are very long. But I've spoken about it quite extensively over a period of time. And what I will point out today is this 36,000 put option, which on the first tick traded at 750 rupees. We had a slightly gap down opening, and it's not even recorded on the chart, but the first tick it traded at 750 rupees. Basically, different people have gone over why this happens, why there can be a complete crash of liquidity and whatnot. But what one has to really be concerned about is how this is happening as seamlessly as it is. So there's one problem with NSE's service, wherein in the first tick, people are allowed to somehow place orders at any price. And if what I've heard is right, a broker using a broker terminal should be able to place for whatever quantity they want. Without checking. In the first tick, apparently it is possible to get away with it even if you don't check what is the margin availability or what is the margin being blocked. You can place whatever size you want, and a lot of people seem to be abusing that. This was on CNBC, so that's my source. I've shared the link to this in the Telegram group. I don't know how true or untrue it is, but if it's true, then that is a massive exploit that has to be plugged right at the beginning. Secondly, you'll notice that in 500 strikes of Bank Nifty and 100 strikes of Bank Nifty, generally this problem has not existed. But now there's no such thing. In the first tick, this is also possible. And everyone's talking about how we should place limit orders. That's the best way. Yes, to protect ourselves, we need to place limit orders. But rather than addressing the problem in the room, it's almost like we're addressing the symptoms. This is clearly not happening by mistake. It is not a series of stop losses getting hit and then some lucky person has an order at a ridiculous price that is being executed. I think there should be some amount of inquiry done into who's the one who's benefiting from this. And if it's consistently the same people, then it's abuse. A lot of people are talking about how, hey, that's what a market order does. It squares off at any price. You're assuming that within a reasonable extent. You're assuming you might have 1%, 2%, even 5% slippage, some amount of reasonability. You're not assuming straight up fraud because while most people say, how can this be fraud? You're placing a market order. It will execute at whatever price. I would still call this fraud because that is not reasonable. If an option is traded for 20 times its price, it is not reasonable. And if it's consistently the same people who are benefiting from this, then that's certainly not reasonable. Because I posted this particular thread on Twitter about how you can make unlimited money, right? And I think you should check this out. Basically, for example, let's just take a quick look at what could have happened today, right? So let us say you sell this particular option, which is a relatively out the money option, right? You do that, and let's say you buy this option. Now at the open, let us say it was something in the lines of this you sell for 750 and this you buy for, this was not more than about 400. You have a profit only trade. Now how do you execute a trade like this? Very simple. Let us say you have the infrastructure wherein you have co-location with the NSE, and you have servers there that are able to process data in like complete nanoseconds, right? So they're able to notice a discrepancy where a relatively out of the money option can be sold. There's an opportunity because now the liquidity has dried up, or you have created a situation where you've dried up the liquidity intentionally, and you're able to sell an OTM option for much more expensive than an in the money option. That is a win only trade, right? You don't even actually have to take the other leg if you take the first leg, and you can square it off in the next second for like 19 times cheaper. So all this nonsense about it's okay, this is how the mechanic is, you have to put limit orders, you're completely ignoring the problem. Yes, you have to safeguard your interest, use limit orders, absolutely, nothing against that, but that is just focusing on the symptoms. I think the main point is being missed here. And people say, oh, nobody's happy no matter what happens. Yes, that's the nature of the market. No matter what you do, when there were option freezes, people had a problem with it. When you're having freak trades happen all the time, people will have a problem with it. There's no world in which everyone is happy, but there has to be some kind of probe into who is it that's benefiting from this. Is this intentionally being created? Because if if it is this case of, okay, liquidity is drying up because of the rapid stop losses that are being hit due to all the people taking 920 straddles and whatnot, that is far less likely than a situation where somebody is able to notice that, hey, you know what, in the first second I can try and place highly improbable orders, place like 50,000 of them, and maybe one of them will execute. That I think would be an attempt to fraud. And also if somebody is like, okay, liquidity has dried up, or if I place a sell order with not much money required, you can, with about 10 crores, you can easily dry up the liquidity at a strike which is not that liquid. So if you take the 50s multiple of Nifty, or 100s multiple, with 10 crores, you can easily dry up the liquidity there, and then place whatever order you want, so that the instant, because you have the fastest order placement, you have the ability to create that situation. I don't think it's okay to just say that, oh yeah, that's just how the market works. So share your thoughts, and we do discuss all of it on Twitter, and we try to make some noise, but at the end of the day, none of that really culminates, because the people who sit at SEBI's office are hardly concerned with what the market or public opinion of them is. So anyway, all said and done, today was okay. We had a dip. I sort of had to cut my long bias position into the dip, which was not great. I sort of shorted the IV there, that worked out fine. Took the exit before the big short covering, and that's about it. So anyway, the plan was to close these trades by the end of today, because tomorrow and day after I'll use most of my margin for intraday trading. Thank you so much for watching. I hope you had a good trading day. I hope you didn't get stuck in any of these freak trades. I can only imagine what kind of devastation it would do to somebody's account, and I don't think it's fine to say that this is just how the market works. The risk to a trader should not be from something so systemic, which is being called as the new normal. So thank you for watching. Take care. Bye-bye.
Want to meet like-minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Okay, so I just realized that this entire time my microphone has not been working, and that just means that everything I've recorded so far has absolutely no value to it from a content perspective. I'll just go over what has happened. And so first of all, on a yesterday mark-to-market closing basis, I was sitting on about 2.66 lakhs in the gain. This morning, once we opened, this more or less at 3 lakhs plus, and there was a little bit of weakness coming from Bank Nifty right at the open. And the way I look at it is that this 36,500 is very important, because multiple times we've taken resistance there, multiple times we've taken support there, and with this lower high, lower low pattern, we come here and we break. So immediately, what I think will be the next level of support is 36,200, which yesterday itself I have created a double diagonal, a calendar position at, and that calendar position is sort of protecting my mark to market as we make a down move. Also yesterday I shifted down this particular leg, which was at 37,100, I shifted the puts and the calls both down to 36,900. And into the weakness in the morning, what I've done is I've taken that 36,900 call leg and moved it to 36,500. I'll be breaking down this trade right now into a very simple way so that it doesn't sound as confusing as most people would think. And I'll go over that. So overall, from despite like the market making, Bank Nifty making a down move while I'm carrying quite a bullish position on Bank Nifty, just because of how the nature of overnight trades works, I'm actually sitting in a profit. Some of this almost feels like cheating to some extent. People who get away with it, I don't even know what to say. Anyway, let me now go over what is the trade and how one should look at it. I'll try to super simplify this, and everyone should be able to keep up. First thing, I want you to look at all these Bank Nifty positions, ignore everything except for this 36,600 call option and 36,600 put option. There is a straddle, right? So think of it as the 36,600 straddle. Currently spot is trading 200 plus points below it. So obviously the lower it goes, the more the straddle will bleed, right? So this is all you think of. Now for that straddle, think of the hedge being 36,500 put option, just consider 2,500 quantity, and 37,500 call option, right? So one thing that okay, your straddle, your put leg is bleeding, but your hedge is also in the money. So your hedge is very close on the put side. It's very close. So no matter even if it continues to go down, you're not too concerned because your hedge is more or less protecting you. Even if you're not considering the fact that this is a monthly and there will be IV spike along with it, so that will benefit you. Forget all that. Basically, you have a straddle 36,600, 2,500 quantity. You have hedge on the put side, which is just 100 points away from where you placed your straddle, and you have a call which is much further away. So you're not that concerned of a down move. The second thing I want you to consider is this 36,500 call option and 36,900 put option. There is no difference between a 36,500 put and 36,900 call straddle and a 36,500 call and a 36,900 put straddle. The reason it is in this inverted format is because when I shift it, it becomes easier for me to just shift one leg instead of shifting both legs. So more or less how you need to look at this is, okay, now I have, first part was this straddle, second part I have a strangle, which is 36,500 and 36,900. And 36,500 is already in the money, so it's not a great strangle to have. But the put option, which is bought in the monthly as a hedge, is also at 36,500. So it's not like there is huge risk once my strike is taken out, because my hedge leg is also at the same strike and a much later dated option. So I'm actually not going to hurt too much if that goes. So I have two bullish positions. One is the straddle, which is once again put in the money, strangle, put in the money. But the hedge in both cases on the put side is very close. So one doesn't have to be too concerned of a continued runaway down move. Okay, that part is clear. So that more or less covers all of this. Second, yesterday when I felt Bank Nifty was weak, I wanted to take some trade that would protect my mark to market in case there was further weakness in Bank Nifty. So what did I do? I took I basically wanted to buy the 36,200 put option in the monthly. But in case that down move doesn't come, or in case we just hold range, then that's going to lose me money. So to protect for the fact that that's going to lose me money on a much shorter dated option, which is the 36,200 put option of the weekly, I have shorted that. Right? So you have to look at these two options and yes, this is losing me money, but effectively the position net is gaining because this is gaining. Right? So while that is clear, what is this? Actually, this position was previously a straddle of 36,600 and 37,100. Yesterday, I booked the 37,100 straddle, moved it to 36,900, and this morning, because there's further weakness, I booked the call leg at 36,900 and moved it down to 36,500. So visualization becomes kind of really important. When you're looking at this trade and you'll be able to break it into different pieces, that's when you know that in case something goes wrong further, what do you do? Like right now, what are my options? In case, currently what I'm working with is 36,200, till there I will let it dip. Beyond that, I will not let the position dip. I have to once again make an adjustment, and overall at the end of the day today, I will be exiting all of my index trades because I'll need my margin open by tomorrow to do intraday trading on Wednesday as well as Thursday. So what will I do? I can take, once again, from the straddle or the strangle, I can take one of the call legs which is further up and roll it further down. Now, in case I keep adjusting for the downside and if there's a big pullback, then I'll also have to set a stop loss wherein I exit my entire position if there's an up move also. Currently, this particular position has to be adjusted or exited as and when we test and break 36,200 on the downside. And it has to also be basically exited if we take out the day's high. So if we head to 36,600, I have to also exit it. So despite having a relatively bullish view on the Bank Nifty, and Bank Nifty making almost now 0.7% down move, the position actually is in profit. And I have not done any aggressive adjustments. So very simple adjustments at different points. If you see, when I entered this position, this was at 37,100, right? 37,100, once Bank Nifty started moving down, I created a structure at 36,600. Now, while that has been taken out and while that was starting to get taken out, yesterday I created another diagonal at 36,200. And towards close, I moved down my initial 37,100 position to 36,900. And that's why, so you make small incremental adjustments where a reversal doesn't immediately hurt you. Like, for example, let's say I was like, okay, Bank Nifty is going to be bearish, and I made this a very bearish position, bringing down my upper break even to something like 36,700 or 36,800. A quick reversal would take me out. So you want to keep adjusting your position in such a way that slowly you don't hurt too much if the directional move continues. But if there's a pullback, it's not like your entire trade has gone to the dogs because you're very aggressively adjusted. So that's more or less what's happening on the Bank Nifty. We continue to head lower now, and we have now broken 36,300. Very, very weak on the Bank Nifty as of now. But as far as mark to market is concerned, I'm still in a much better position than what I was yesterday at close. Okay, as of now, slightly better, and also there seem to be some big jumps in prices left, right, and center. But for now, I'm just going to wait through this and wait for 36,200 to get tested, and then see what changes I have to make, if any. The Nifty position is doing all right, and the Reliance position is also fine. So as of now, it is just Bank Nifty that is being extremely weak. Okay, we're breaking 36,200 on the downside. I made all the adjustments that I could possibly to protect. But at this point, it looks like quite a runaway move, and we might actually pull all the way till 36,200. So that is going to be a problem. I have my exit order on the Bank Nifty ready to go, and I'm more or less keeping a trailing stop loss. So in case that hits on a mark to market basis, I will then just start exiting the position, because at this point what will happen is my in the money shorter dated puts will more or less act as a future with delta very close to 1. So at every 1 point there will be almost 1 point gain on the put option, whereas my longer dated put options will not do that. So we'll have to more or less cut out. Okay, more or less taking the stop loss now. We have very clearly broken 36,200, and there can be a lot of downside. This is almost from the open, a straight 400 down, 400 point down move, and there could be a lot more pain in this than I would be willing to take. But basically, I think due to right selection of hedges, this position is still alive. I can keep the Nifty position alive, and also look and see if there is a intraday trade opportunity. I can look to strangle from the 17,100 put option from here, because there is good strength in the Nifty, and that can be taken advantage of to gain something for the day. So I'll keep you posted. For now, I'm just exiting the Bank Nifty position. There will be slippage at exit, that cannot be helped. But yeah, the Bank Nifty position squared off. But more or less, I think it at the end of the day wasn't in a loss, considering there was a 1,000 point move from entry to exit. Okay, loss of 29,000 coupled with slippage and whatnot. So I would say more or less a notional loss, but it was something that had to be incurred, given that almost 1,000 points is from my entry to where we currently are. in about 3 days. So that would always be difficult to manage. Okay, have switched my position around. Basically, after the down move, I was kind of long IV into that move with both Nifty and Bank Nifty. And after we have now taken support at 17,300, I entered around here a strangle of 17,100 and 17,500. I also squared off my later dated hedges and bought all the hedges just for the purpose of hedging benefit in this week's expiry. And this is the position now, and this is not a position that I will be carrying overnight. This is one that I will be squaring off by the close of today, and yeah, most likely will not be carrying anything overnight, and we'll keep you posted on that. So squaring off the Bank Nifty position definitely hurt me from a mark to market since opening about 1.4 down, but I guess there was not really much of an option into the kind of weakness, and 16,200 more or less was expecting there to be support, but it was taking too long. If it takes too long, sometimes it can be quite bad. It's very possible that from here we have a breakdown. I cannot hope for this, and since 16,200 was the exit that I put for myself, yes, I exited at a terrible price. So my whatever bought put options on a mark to market is going to show quite a negative, but my sold put options are also going to show quite a bit of positive. So it's really nothing too much to be concerned over there. Overall, it will still say that it was a good decision to do, and now there's no point in me thinking of, oh, okay, I could have waited for the bounce and gotten a much better exit and whatnot. Would have more or less exited at roughly about 1 lakh better if I waited for a bounce, but that can come or not come. So it's really not okay to do hindsight analysis like that. Currently, my position is strangle, which is 17,100 and 17,500. There is about 22 points on the call, 20 points on the put. My idea will be is if we start heading higher now and we take out 17,350, I'll move my put up by about 100 points. And after that, I will be trailing a 4-point stop loss on the entire position. Okay, the time is 11:30 and basically pulling back after making the initial dip, and potentially what could happen is by the close we could pull back all the way till 17,400, making it a no action day, and yeah, getting a little bit cheesed on that. Basically, the way I see it right now is if this 17,500 call expands to about 22, 23, here is where it can potentially break out from. Same way this call lost all the way from 35 to 23 and below in the morning, just that quickly it can gain back if we have a quick move, and then that is leading to short covering. So more or less, I will wait and see how things pan out here. If it looks like we're heading higher and heading back to where we opened, then I will be exiting the entire position. I'll not be so I have my exit orders ready. I'll be exiting the entire position rather than trying to adjust it. So we'll keep you posted. More or less, since open market basis, about 60,000 given up. And had I stayed in my position, I would have basically been up by 40,000. But I can't keep looking at that, because the main reason I exited here is not because I no longer want to hold the longs. One thing you have to understand is about exponential gain and exponential loss. When you are, first of all, my diagonal is in such a way that it's already in the money. My long puts might not gain as much. If there's a cooling off in IV, then my long puts might actually lose, while my short puts are actually gaining. And also the rate at which, like between 36,200 and 36,100, the rate at which I would lose would be very high. Right, so that entire move I was able to manage by just giving up a little bit, but that would exponentially go up the moment we start sliding further from there. So it's not exactly like it's a 1:1 trade where you gain the equal amount for a 50-point up move versus you lose the equal amount for a 50-point down move. At the point where I exited here, purely on, I'm talking about a mark-to-market account. At the point when I exited, let us say about here, a 100-point down move would probably cause me 4 times as much harm as a 100-point up. So it is not a very good trade to be sitting on. because hindsight analysis will tell you, oh, look, it got bought back. And this is something that you have to get very used to dealing with. If you've decided at some point you exit, you exit. And that gave me a good enough trade on the Nifty where I was able to enter these puts at a pretty good price into the IV spike. So rather than staying long IV at that point, because now all the IV expansion is happening when the calls are expanding. So obviously, when we make a down move, there will be an IV cool off, and the puts don't necessarily have to give up much value because whatever meat was there in the calls, that will start cutting down. So yes, all of that said and done. Right now, after entering the Nifty position, I benefited quite a bit, and I won't have the margin to do that. Was my margin tied up in other positions? So all that said and done, trailing a stop loss more or less. If this expands to around 23, and there's good strength coming, then I will just exit the entire position. Also, one more thing, the Reliance position today, once again, after making that up move and then getting rejected to a considerable extent, I still made an adjustment on Reliance, which was to account for the fact that downside will not be too much after this breakout. So post adjustment, the position is looking all right. I'm happy with the range as well. It is currently losing, but it should be all right. It's just a matter of time, unless we have an even more continued breakout, in which case, if we start looking like at any point we are going to close very close to 2500, then I will make another adjustment here and probably pull up my downside break even by 50 points and increase my upside break even by 50 points. So that will be the change made, if at all. Yeah, we're not even halfway through the day, and so far so good. We'll keep you posted. Time is 11:40 almost. Okay, so into the down move, we had tremendous writing of 17400 call option. So if you see today, addition of open interest, there isn't really much put unwinding, but there is put writing in 17300, which is expected to act as a support, and massive call writing at 17400. Now, from an overall perspective, 17400 is now max call side open interest, and 17500 we can consider ceiling territory, and people now taking positions around 17350. Now what has happened is this move, which is pulled us above here, if allowed to go up, would lead to a short covering on the calls, and people who have aggressively shorted calls in the morning into this move will now be keeping the stop losses above this. So try to pull back, got rejected, try to pull back, got rejected. This time, if it makes up, that's where will be the stop losses of people. At the same time, into any kind of call expansion, the puts are giving up quite a bit of value, so there's no further spiking of IV. It's seeing a fall off in IV on the set itself, which is why my position is doing all right and continues to benefit as the day goes on. In case I do exit though, I will be exiting both legs at once. The way I see it is most likely we will not be allowed to now very easily take back 17400, even though it's just 50 points. I don't think such a situation will be very easy. Like to pull back till here will not be easy. But if these stop losses start getting triggered, then yeah, the market we have been in, no one should be surprised if we then head to a new all-time high very quickly. But right now, this is what I'm working with. My sacrosanct exit on this is 23. So if this expands to 23, I'll be exiting the entire position altogether. We'll keep you posted. We're about halfway into the day, and now there is some amount of strength coming from Bank Nifty and Reliance both put together. We'll have to see if Bank Nifty retakes 36,500 because there's a lot of call shots that took place on the Bank Nifty as well into that down move. Yeah. So all put options above 36,500 have been unwound, and there has been only additions of calls above that strike, and even and some amount of people taking this sideways position around 36,300 and 36,400. So yeah, it won't be very easy to get pulled back up, but very much possible. And I think more or less my exit is going to be met quite quickly if this closes in green and we have another green candle. That will be my exit. See, despite the calls rising, the puts are giving up a decent amount of value, so it's not too bad. My only problem will be after it goes above 23 and this reaches something like 11.10, then it will be a problem because my put option then will not lose value anymore. Okay, my exit is being met. I'm just going to take the exit. Good enough. I'm exiting at a point where I'm booking a good enough value on the position, so I don't have to be too concerned of a further expansion. Okay, so good call to exit, because right after exiting, we had this big up move and this big pullback on the Bank Nifty, and yeah, that has definitely blown up the calls. So I mean, went more or less exactly as one would have thought, right? So this 22.23 broke out and is now at 30 plus. So anyway, good call to exit, and more or less people who aggressively sold calls in the morning in order to be in a rush to protect the down against the down move now are having to cover those calls, and we are having a pullback to 17,400. Either it wouldn't have been easy to pull back, or we would have had a very quick covering, which is more or less what has played out. Now, if you do the summation of all of my positions, which are closed as of today, that would be about 3,50,000 green that has been booked. So about 3,50,000 has been booked, and from my Reliance position that I will be carrying, it is currently at a 1,20,000 loss. So more or less that is the end of my trading day. I will not be doing anything further. I think here it would have been very difficult to hold on to the position. It was just bad risk reward, and I think we played this entire day over again. Potentially what I could have done is increase my lower break even by another 100-200 points, but even then it would put me in quite an uncomfortable situation. It's difficult to have a trade where it goes 500 points against you and then goes 500 points reverse. You cannot expect for such an outcome, and most likely the kind of aggressive adjustments that would have to be made on the downside would hurt on the reversal. So yeah, I think two takeaways for me from this trade is: one, if I'm going to go for a relatively high risk reward, I need to keep my position sizing lower at the entry at least. What ended up happening is at the entry and immediately making an adjustment, I almost committed about 50% of my margin just to the positional trades, and the risk reward, like the best case scenario on the Bank Nifty was 20 lakhs in the green, worst case scenario was 40 lakhs in the red. I think that was too big a sizing. So positional trades I will keep much smaller, like for next week basically. And yeah, that's the only takeaway. I think Nifty trade played out very well, and Bank Nifty trade not so much. And after exiting this, I got to capture almost a good 6 points on a 20,000 sizing on the Nifty. So that's fine. So that's about it. That's all for the day. Thank you so much for watching, and I will catch you tomorrow. Take care. Bye bye.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.